Good day, everyone, and welcome to special webinar today about the British referendum, European Union referendum, about Brexit main results and trading. So it was very, very volatile. And of course, guys, I need to tell you that you really need to be very, very careful. So even before we begin with this webinar officially, well, you need really to be very careful because central banks might intervene. You need to know that price flows need always to be in equilibrium. So don't pay attention now to standard market analysis because as you probably saw, everything what I predicted was completely it happened exactly. The only thing where I was wrong, I had my own prediction. The exact percentage was 52-48 for the leave camp, and my prediction was 52-48 for the stay camp. But in the case of Brexit, everything happened as I predicted. So guys, my predictions, now you will see my predictions during this webinar, but the only thing that common sense is telling me that central banks may intervene on the open market, and guys, you need to be prepared for that. So don't listen, don't read everything that you don't believe everything that you read. Just believe that in the case of when equilibrium is disturbed, central banks will intervene to put the prices back into equilibrium. So that is the only thing. And today we saw double action. We saw Swiss National Bank intervening and BOE also. So it can be more. So BOJ can also intervene. So please pay attention to that. If you trade with a lower lot size. Of course, you need to keep your account safe. Okay. So I have covered also the live event through AM Brexit FAQ. So I gave my own opinions during the voting until 2:30 London time, and actually it was very, very interesting to see results coming in and how the price behaved. So before we begin with the actual webinar, a quick disclaimer: explain that all online educational materials are available by Admiral Markets Estonia for a global audience. So if you want to get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country, and contact an appropriate entity. And risk disclosure statement stating all possible risks associated with the Forex market. By accepting the risk, you're also proceeding further with me. So today's agenda will be Euro-Ref voting process. Can it get out of control? Currency analysis during Brexit and the aftermath. Okay, so this will be today's agenda. Okay, so I was very, very, very extremely busy during these couple of days. Also, I'm preparing the article which will be published on Sunday on admiralmarkets.com about the outcome, about what we can expect, and I will also publish a video for possible currency movements, and you can read it also on Sunday. But today we will cover most important aspects of equity pairs and GBP pairs. So with information that we currently have. So have in mind that everything this now is in the process, guys. Even the process of leaving the European Union will take years. Okay, so don't think that UK will leave this immediately. Okay, it will take some years, and the implications will be seen during the time. Okay, the impact, as I predicted, was a bit negative, of course, and it was definitely expected. This was the analysis that, and actually I also presented a similar form to Forex Street readers. Stock markets, equities, everything happened. 100% risk of gold up. You saw what happened with gold. Commodities prices down, equities down. Everything happened as predicted. Even with dollar yen. I did it with Forex Street last week. So it was what could happen with actually this was this week, 2 days ago. What can happen with dollar yen? And it went exactly where it was planned to. Also pound, and well, everything was pretty much clear. But at this point, it's not that clear, as it was, of course, before the referendum. Now, what happened exactly was these were the steps that were taken before voting process. So polls have closed in a referendum on whether UK remains or leaves. So around 46.5 million, 67% turnout were registered to vote in what is the third nationwide referendum in UK history. Votes were counted at 382 local counting areas in UK and Gibraltar too. So you know that there are different nations in UK. So it's there is England, there is Northern Ireland, there is Scotland, there is Wales. Gibraltar also was a part of voting, and it was expected they will vote to remain. Also, individuals' real results were declared throughout the night, along with the results from 11 national and regional centers, and everything was covered live. I was watching it live on BBC, and it was, as I say, this was the final result. So my prediction was 52 for stay, actually, but the exact percentage was, but in favor of leave camp. I personally, now I will tell you my opinion. I personally am a bit of surprised because I expected that UK will stay in European Union, but I also know that a lot of young people voted for actually staying in European Union, while Middle England and older elderly people voted for actually leaving European Union. Now, what I can say is these are final results, guys, but actually there are a lot more to happen, and Parliament also needs to actually approve it. So we will talk about this in a few minutes. So can it get out of control? Well, as I said, the English were more likely to exit, especially in Middle England. And actually, that was the first a bit shocking surprise during the voting process, where you could actually see, where we could actually saw a big spike down on GBP dollar, and that is what I will show you later during the webinar. And actually, that was all normal because it happened during voting process. Also, England economy props up the rest of UK economy. So the England is definitely the most important. And I reckon that if they did all the Middle England counties first, because they are smaller hamlets, it will be a strong exit. And actually that happened. The price went down, then it went up on a good result from London, and then it dropped heavily when the final results were given. Also, England support and fund the other regions. So if England thinks they are out of pocket with European Union, they could better spend that money within their own economy. So this is the main reason, guys, because actually forget about all these important facts, because everything sums it up here. If England thinks that they are out of pocket with European Union, so the aftermath is they could better spend that money with their own economy. And it happened for various reasons, but this is the point, okay? But also, what is important is that Scotland and Northern Ireland want to be a part of European Union. So this might create a problem within UK itself. And I wouldn't be surprised if Scotland and Northern Ireland actually call for a referendum and the UK splits. Okay, I'm saying these are all possibilities now, because now European Union is also endangered. So this can be a domino effect for all the Europe, okay? Now, can it get out of control? Of course, because Italy, France, Holland, and Denmark will all call probably for referendums. Okay, we don't know if it will happen, but it might happen, guys, because politicians across Europe today have called for their own referendums in the wake of Britain's historic decision to quit European Union. Also, Italy five-star movement, that is an anti-establishment five-star movement, they officially called for a referendum on whether to keep the euro or not. Actually, they want two different currencies. Basically, the currencies for more developed part of Europe, and the currency that will be for countries that are not so developed. Because obviously in European Union, guys, you have different measurements, of course, because there are nations that are more developed, there are nations and countries that are less developed. So you cannot compare UK and Germany with, let's say, other, I won't name it, but you know that there are also other parts of European Union that are not so developed. So actually, that's it. So they need to have two different currencies. Now the thing is that two different currencies will not be good for Germany, because if it happens, Germany will not allow for it. Okay, it will not. They will not allow for it, simply because they don't like to have a strong currency, because a strong currency hurts exports. So I'm not sure that Germany will agree. Also, guys, the point is that we can see here from this poll and everything that was happening during all this time, that European Union is a bit it's like, it looks like it's decaying. So I'm really interested to see the development and what it can happen. The thing is that in my opinion, guys, forget rate hikes in USA also until presidential elections, okay? Because too much at risk now. European Union could implode, and don't forget it, it's the largest trading bloc in the world, okay? So the thing is that European Union can survive if European Union and ECB want it to survive. But it might require two currencies. My own opinion also need to agree that one currency should be for weaker economies, another for stronger economies. But also, guys, don't forget that ECB must get on front foot before all these European countries start doing referendums and vote their way out of European Union. The point is that European Union or ECB must offer another solution to current model before European Union member starts departing. No rate hikes until presidential elections. Okay? Don't forget that this what is happening at this point is for the first time. Okay, guys, no country has ever voted to leave the European Union before, and definitely we don't know how they will proceed. All we know at this point is that there is actually the Article 50, and the Article 50 tells us how a European member should proceed in order, if they want to withdraw from European Union. So Article 50 states how UK now would negotiate its terms for leaving the European Union. The thing is that Britain will not negotiate directly with member states. Instead of that, member states would meet among themselves as the European Union Council and agree on a framework. They approximately have 2 years to agree on Brexit. Okay. The problem is that that Article 50 states the process that countries should take when leaving European Union. But the thing is, it says there are 2 years to reach an agreement on the exit. But the thing is that all other countries within European Union need to agree whether it will be 2 years or not. Okay? During these 2 years, while this process is taking place, the country would still be governed by European laws, treaties, but it will not be allowed in the decision-making process. Now, if all members of European Union agree, deadline of 2 years can be actually prolonged. The thing is, this is, as I say, this is the first time that these things are happening. So when this process has been started, there is no turning back, guys. Okay? And now, if this is officially started, Article 50 does not state any provision that allows a country to go back. So what will happen is, if Parliament does not agree on this decision, what will happen? The point is, I don't think that the Parliament will not allow for the complete decision. They will probably make it live, so they will approve it, because they don't want to risk any civil war between people who voted for out of European Union and the people who voted for inside European Union. Don't forget, the Londoners were heavily for European Union, while Middle England was outside for European Union. Most of that, it will happen usually during in every single country. You will see major cities voting for European Union, while Heartland is actually in the contrary. It also happens here. It also happened on most of states where I live, ex-Yugoslavia. So everything seems to be the same. So the thing is that if Britain ever decides that it wants to be back in European Union, it should probably go through the same process as any other applicant country that wants to be in European Union. As I said, the Parliament first needs to approve the decision. So the Brexit referendum was not binding. It's not binding. It's not a must. But any deal should be approved by Britain's Parliament. Okay, so that means that the parties who are pro-stay, let's say majority of Parliament, may try to block any deal that I think it doesn't give the country enough access to European Union. Now, if that happens, we could see elections, guys. We could see elections in European Union. Okay, so I personally think that Parliament probably will not go against majority, but they might slow it down. Okay, because they have the power to influence negotiations and to actually call for a new elections. Everything now is in the state of turmoil, right? Now think, guys, think. Just apply logic. If things are not that clear, and they are not clear, no one can tell you that everything is clear. We know what will happen. We don't know what will happen. But if this happens, what I'm saying now, that there might be new elections in UK, because obviously majority has the power to stop the influence of anti-European parties within the Parliament itself. It could create another turmoil within the markets themselves, within the equities market, within the stock, the bonds, okay, within FTSE, within Forex pairs. Because you know, I've been always telling you guys, you need to connect other markets when trading Forex market. I don't know if you all follow my webinars analysis, but I really am trying to instill in your heads that you need to watch intermarket correlations. It was not coincidence that my levels were guessed completely, and they went in accordance with the analysis, because equities, Forex market, stock markets even are connected. They are interconnected, and this all has one thing in common. It's called high politics. So if we see elections, there will be implications on euro, on GBP dollar. I will delve a little bit later during the implications of possible for possible Forex movements. But have in mind, guys, that there could be interventions in the Forex market. Okay. Now, as you probably know, Mr. Cameron, he actually, I'm sure that he didn't expect that the result will be like this. And he gambled actually when he called for a referendum. Now he resigned, obviously, and he needs to deal with the consequences. Okay. The thing is that he he said today that he will resign, but he probably can set his own timetable to step down. But if the implications on the UK will be very, very bad, I mean, specifically, I'm referring to economical fallout, well, he might say that he still needs to stay in the office as prime minister to help Britain to get back on course. And that could also take months. Guys, you need to know that everything can happen. Now, what I'm speaking currently, everything can happen. Okay, Cameron did say he will resign, but he still has the time to actually resign. So if the economical implications are that bad, well, he will probably stay. So it will also create an impact on different markets. Okay. Now, the thing is, what will happen later to the financial markets? The thing is that we will probably see huge selling on rallies. But the thing is that what will happen ultimately isn't certain, because I say central banks may intervene and correct the price. Okay. What I personally think is that majority of traders will look to short pound crosses, equities, and all that has risk within itself. But the problem is, guys, what about BOJ? BOJ simply doesn't like the strength of yen. So what if BOJ intervenes, and that means that equities will go up and all yen pairs will go up? Okay, so if you trade, you need to actually monitor your trades. I really don't recommend any swing trades and anything that can greatly influence your midterm trading. Now, just a few things what can happen to European Union. I personally think that European Union is endangered, because this will be a food for anti-European politicians all over European Union. Okay, France, Italy, Marine Le Pen, all these politicians here also. Everything now is confused. Now all these politicians will probably use the strength of Vox Populi, or major population within their own countries, to spread anti-European Union propaganda. If you're smart, and I reckon that all of you are very clever and smart people, you should not fall for that. We should not allow for any Euro skepticism without any valid proofs, because the thing is, they all those politicians will want to promote this event for themselves. Okay, every single anti-European politician will promote this for their own selves. Okay, for themselves. So the thing is, we need to think rationally. We need to calm down and put all things on table and see what we can have and what we can lose. There is no time and there is no place for emotions now. Okay, humans are emotional beings, but when you dig deeper, emotions kill people. Okay, so please, you really need to be calm. You really need to assess this from professional perspective. No matter whether you're an economist or you're a simple worker in factory, you need to actually you need to divide things, pros and cons, and let the time for things to develop. There is no now decision that can be either good or bad. So clear minds, everyone, clear minds. Okay. About currency implications, guys, I actually recorded this, and I will also make a time-lapse video for this. As you can see, this was the currency analysis during Brexit. The point is that everything happened as I predicted. This was the first initial reaction on the first shock when actually this was when 61% of voters in Sunderland backed Brexit, and 49 in Newcastle, and the value of GBP dropped by around 3% instantly, guys. So you see the movement in the Dragon GBP, and it was very huge. It was like 1,000 pips in 2 minutes. Okay, and the thing is that after the announcement, that was a bit really the result was a bit higher than expected, because voters in Sunderland were not expected to vote for 61% in favor of Brexit. That percentage should have been lower according to polls. So this dropped heavily initially, but then the price corrected when the Londoners step in, and actually guys, 3:24 a.m. GMT plus 2, actually you see Oxford 70.3 for Remain, 29.7 for Leave. London was for Remain, and that is what happens to major cities. So Londoners were heavily on Remain side. You see Oxford County, and that happens because young people want to work overseas. They don't want to go outside of European Union. Many people now who work in UK, especially from Poland, will have their own doubts, and they are probably afraid for their own future. The thing is that you will probably see now that people are very, very uncertain what will happen to them, and maybe some people will feel like they're rejected from Europe, from UK. The thing is that again, this explains mainland heartland was actually for Brexit, London was for Remain, and those were results. So as you can see, all these pairs corrected themselves. Later during the night, we saw a bit of upward price action. As you can see, started from 2:30 my time, so it's like 1:40, 1:52 a.m. London time. The price corrected on good votes, on Remain votes, and then it started to drop heavily. So the price was swinging up and down. Simply, this was sentiment trading. So we witnessed huge movements of the price, up and down swings, because votes were coming in every minute, and the price swung violently in both directions. Now the aftermath was also I wanted to say that during early London time, BOE intervened, bringing back pound dollar back to 139, so 800 pip was done for after intervention. Also SNB intervened. The price corrected itself, but then they started to sell it again. Now, before I show actual chart what would happen, this is, guys, what I think: 1.3000 on GBP, and actually this might be lower also. So we should not just bait on this. I think that this could be lower during next couple of months. Okay, we need to be careful because there will be interventions, but this should happen. Okay, there will be a strong demand for yen that will make equities down. So there could be BOJ interventions, and definitely, guys, definitely be very, very careful, because you actually don't know what might happen for certain. Here, as you can see, this is the price action here on pound, okay, on pound, and you can see a heavy drop towards supports. Even if you open monthly chart, you can zoom out here and you can see here, this is pound yen. Pound yen probably would fall and would try to fall toward historical lows here, but these lows already happened, so I guess this could be possible before any BOJ intervention. Okay, you see this is similar pattern to what we have on pound dollar, but on pound dollar we cannot go in the history before 1992 also. So pound yen has its own history, while pound dollar doesn't have. So as I warned on a webinar before this one, this will print out new levels. Here you can see 1992 new levels have been printed out. So once price breaks through it, there is possibility that it will follow. But as I say, you don't want to trade it immediately here. You want to wait for markets to calm down a little bit. Then we will do assessment where we could actually take some trades. As always, you need to be careful because BOE can intervene, can try to bring the price back into equilibrium. But one thing is for certain, sell on rallies is the major option, okay? As for spreads, as for margin, as for pip count, I expect that most brokers will stop on this. They will probably stop applying this new policy on margins after this week. So on Monday, probably we could expect a bit of normal margin. So it will get probably to normal, and also liquidity is thin now, so we might see a liquidity raise too. Volatility should remain high, and what I would pay attention is Bank of Japan yen pairs, because if someone intervenes, that could be BOJ intervening first. Okay, so you need to watch for that. As for pound dollar, the most interesting thing is that because we don't see historical levels here, you need to go with logic. The logic is bank always use big numbers. They always tend to use rounded numbers. So you see, this is the low for this was actually, let me see correctly. Okay, here. Okay, here. Okay, I don't need this. This is what I need. So you see the low, 32.26, okay? And then the pound. So 32.00, you need to go now with round numbers. So 32.00 is definitely important now. Now I would go with 200 pip count, okay? We don't want to just watch for every 100 pips, so I will place another line here, and that will be important level for me to watch for, and that is 1.3000. Below that, guys, 28 and 25, okay? So below that, you need to pay attention to, because we don't have a history now here, we need to go with rounding numbers. And this is what we need to watch for, 28 and even 25, okay? So this will be most important levels. Please keep this on your chart. And for rallies, we have some history to count. And actually, I need to see the daily close for this day. I need to see what will happen on Friday. And I will do the early pre-analysis of the markets on Sunday, and I will publish it in my next article. The thing is, what I know for sure is that majority of traders will probably look to short it on rallies, and that means that also yen pairs will be shorted on rallies. Okay, that means ODN especially. So you need to watch for ODN during Tokyo session. Watch for Chinese A50 stock market. Watch for Nikkei index, because Nikkei will also move ODN. And definitely, guys, you need to watch for pound yen. You see a lot of things to be considered. What I would like to see, as always, with big movement, I want to see even better retracement. So from trading perspective, I would really wait it. I would wait to see for these possible confluence here. So the low of this candle, that is 145.37. So 45.37, somewhere in between here and 146.70. So this is important. There could be a retest of this zone and then a possible drop, because in the history, you see, this was very, very important part. This level was broken here. So just from a breakout retest point, I would look for reaction around this market. Until then, I don't touch it, guys. I won't touch it here. Because, as I say, we could see some we could see an intervention from BOJ. Don't think that there will not be interventions on forex market. There should be interventions, because that is the role, guys, of central banks. Okay, the role of central banks is actually to intervene if the price is out of equilibrium. Okay, natural equilibrium. So you see, there is a big downside for pound yen. That means yen went up, and the rise in the yen keeps really alive the risk of intervention. Okay, there could be coordinated intervention by the G7 countries in coming weeks. So if you want to make any trades, better to wait for retracement than trade it safely with lower risk. Okay, you need to go with lower risk. Okay, getting back to pound dollar. See, there is a lot of confluence here, but I'm not sure that this can be reached without any form of intervention. If we see an intervention again, this is historical low that has been broken here. I also warned about it, and here you can see that actually it's in confluence with 50 retracement. Okay, so I would be really paying attention to this region too. Okay, so this goes in accordance with historical buyers that happen here. So once price gets here, maybe we could expect another drop, just to respect current sentiment that is aligned with technical zone. So I'm not touching anything before pound dollar gets here, unless I see a clear close below this low here. So I would like to see a close below 32. That means that we are way down, and that pound dollar will move towards these levels here first. Before that, because the price is now above the important support 32.00, I want to see either here first before I make an actual decision. So all this will be covered, as I say, in Sunday webinar. For dollar yen, well, guys, as you remember on live webinar with Forex Street, I predicted that this will happen, and exactly it happened as I predicted. So 100.00, it was reached during this event. And also another important level to watch for is, of course, 103.50. So unless I see a retest of 103.50 or clear close below 100.00, I'm not touching anything. Okay, I will be sidelined, because now everything is sentiment versus possible intervention. So I will not be gambling. I'm not a gambler, so I will be waiting patiently for retracement. You know, guys, how we usually say? We usually say after a big movement, there is also a bigger retracement. So I want to see that retracement. Okay, that is a simple logic. Buy low, sell high. Simple logic. So another good possibility is that the price will be rejected from this zone and it will proceed down. So we need to wait and see what will happen, because, you know, for example, if Parliament rejects decision about Brexit, this will spike again. Equities up, pound dollar up, and all yen pairs will probably go up. So you need to pay attention for it. So this is what I think. Okay, it might happen, but as I say, watch for these levels and wait for retracements until you make a decision for a trade. If you have any questions, guys, I really try to use as much information as I can. This was a short span, because the price moved heavily during the night, then price moved heavily during the the early London morning, and now actually it's 2:40 London time. So I couldn't simply collect every single bit of information I need to make a final decision about entries and exits. I know that you probably you know that I always give you entries, that I give you exits, and I know that you want that from me. But at this time, we need to be simply, I cannot guess now. I need to see the development of price action. I need to see whether these levels that I've been speaking through will be retested, because I want to see a retest. Not there's a simple price action in between. I need to see a retest. After I see a retest, I will know what it should be done, and of course I will update information on Admiral Markets and Forex Street, so you will be guys first to know. But until then, don't ask me, can I short here, can I long there, because we need to see retest. We need to see what banks will do, okay? Whether they will intervene, whether the market will retest all these important levels, namely 103.50 and 100, because I already told you this would happen, and it happened. But what now? See, the price is in between. So this is a no trading zone until this actually isn't retested. Now, maybe if we don't see any clear retest during next week, then we can say, okay, they're definitely going lower, so we need to see where we could short it. But until then, we need to see when dust settles down, we need to see what markets will decide. Same for pound. You see, pound is kept now above this important level. Okay, it's obviously that it's being kept above this level. Okay, and why is that above 35.40, or let's be more precise, about 35.00? Okay, because that is historical level. Okay, this is head and shoulders, and this is historical level. This is actually you see this is strong buying here in the history. So obviously Bank of England probably keeps it above it. So if we see a candle close below this during the next week, we might assume that the price will try to push it towards 32.00. So wait for the dust to settle, then we will see what might happen. You need to have an approach, professional approach, not a retail approach. What means retail approach? Retail approach is when you have a system and you trade what system tells you to do. It's not professional. Professional approach is take all things into consideration. Take fundamental views, take intermarket correlations, and wait for the dust to settle down. Because when you patiently wait for the market to come to you, it will come to you. If you try to chase the market, you will never catch it, because there is now a lot at stake, okay? Especially now after a Brexit vote. So let's wait technically for these levels to be retested, or if we don't see a retest, then we might see a continuation of bearish movements, and I will be the first to give you the exact updated information where to put trades. Like I did with euro dollar today, you could have made more than 100 pips on my euro dollar analysis. It was published on Forex Street also. I don't see any questions, guys, so I assume that everything is clear. I hope that you actually even made some money, or if you didn't make any money, it's good, because sometimes not having a position in the market equals to having a good profitable position. So everything is clear, no questions for me here. I will be with you soon. We'll update levels, course, but we need, as I say, to wait for the dust to settle down, to see whether the banks will intervene, where they will intervene, where the retest will happen, and how the price momentum will be concluded. After that, I personally will have a more clear picture, very clearer picture, to give you the exact setups for trades. So until Sunday, guys, watch for these levels I have provided you with. Stay away from no man's land, and trade professionally. Be patient. Market is here. It won't run away from you. You just need to be patient. As always, guys, I have a very pleasant time with you. Always appreciate your comments, your questions. Don't forget it. We are here to help you, and I'm here to make you make pips. Cheers, everyone. Talk to you soon. Bye for now.